All right, good morning, everyone. Happy March 31st. Let's get a quick sound check going here. All right, good morning, Earl. Good morning, Kurt, Mirza, Lorna, Debbie. All right, guys, final day of the month, final day of the quarter, which can bring some shenanigans to the market. And then you got the other thing happening here, which be, let me go find the link for you. I'll send y'all the link. Let me see. I should find it on Twitter here real quick. But the role of the JPM caller today. Let me see. Where's that article? Yeah, so here's a post from Spot Gamma. So I'll put that in the chats. Now, I'm not going to go too much into that. There's about 40,000 of the 5565 puts on the SPX that are set to expire today. I know we're going to gap down a bit here. S&Ps are down about 1%. Just, don't be too surprised for some trickery in a pop, maybe back towards that 5565. Could be an interesting spot up. But you got that going on. You have the quarter end of month action. And then we have all the economic things happening on Tuesday. Not Tuesday, Wednesday, right? Yeah, Wednesday, April 2nd. So as always, a lot of moving parts here in the market. But putting all those things aside, four major things I think into this week. One would be we have bear scores on the big three sheet. All right, bear scores. We have, I think, pretty bearish patterns in the price action. So we got bear scores, we got bear patterns. And then on the indexes, the leading names on the signals, a lot of big three sell signals. So we got bear signals. And then the fourth thing here would be a lot of bear squeezes. Or a lot of weekly squeezes, a lot of daily, hourly squeezes. Broken structure, bear momentum, looking like they want to fire short. So for the first thing here, the bear scores, let's go take a look at our spreadsheet. And I threw things onto this spreadsheet. All right, everything in red has a negative total score. Everything in green has a positive total. Meaning we're banking on gold, silver, energy, and XLP to save the market. All right, every index has a negative score. Every Big Ten name has a negative score. Netflix did look pretty good at one point last week. That drops to a -1. Nvidia taking a lot of damage. Google, Microsoft. You got the SMH with a -90, 1 out of 120. So you're 30 points away from the weakest score possible. XLK has a -87. Big Ten's got a -73. So only green spots, only spots of relative strength. The gold, the silver, energy, and XLP. And now we're at the point where over here, the indexes are at -62% of max strength, and the Big Ten basket is at -50% of max strength, which in my book is a bearish reading. Anything better than plus 50% is bullish. Anything weaker than minus 50% is bearish. So the scoreboard not looking too good there, and then the patterns. Very typical, very classic reversion to the mean patterns in more of a bear market. So take the S&Ps here, for example, and you get the initial flush, you find your bottom, then you rally back to a falling 21 EMA. And think about, what do you do in more of a bull market? In the bull market, you have a trending 21 EMA, meaning your 21 EMA is pointing higher, and you're going to rally away from it, you'll pull back to it. You'll mess around for a bit, you'll rally away from it, you'll pull back to it. Very classic uptrend. Downtrend is just the opposite. You flush away from your 21, rally back to it, get rejected, right back down. And now not too far from the lows here, brand new daily sell signal, brand new daily squeeze. So my thinking here, guys, is under 5,700 SPX, until the signals can really change, I think the odds favor they want to break that daily squeeze short. Now, here's where the plot would thicken. Other than a break back below the recent lows here, looking at the weekly chart on the S&Ps, and the weekly squeeze is officially fired short. So from late January up until last week, you got that weekly chart building up all the energy, and now on that Friday candle, you are releasing the energy. So not a great combo at all if you're bullish. All right, you'll flush it, rally back to a daily 21 EMA, get rejected, daily squeeze, back under the weekly 50, and the weekly squeeze officially breaks short. It's just a lot of things pointing towards your path of least resistance, for the moment being to the downside. Now, like any good weekly squeeze out there, should it fire short and should it work down towards that target, we're talking S&Ps down to about 54 to 5,300, which interestingly enough, I think interesting, pull back into about 54, 5,300 SPX would conveniently be a pullback to the monthly 21 EMA. So like we talked about before, if this is a 1 hour time frame on the S&Ps, nobody's looking at that and they're bearish. It's a really clean hourly uptrend. You've got really, really good structure. You got momentum behind it, buy signal, perfect score. If this was a 15-minute, 30-minute hourly chart, there wouldn't be as much emotion here on the pullback. You get that reversion to the mean on a weekly chart or a monthly chart, there's always going to be more emotion behind it. That's S&Ps from 6,200 down to about 53. Yeah, good $900 haircut. It'll be a little emotional. But as we do these these pre-market prep sessions, on the way down here, I do want to keep on coming back and referring to that monthly chart. Could be a case of you had a big monthly squeeze last year, fired long, kicks off the push, takes you towards your target, and then up there towards the highs, the market's getting a little bit tuckered out. Like any 15-minute, 30-minute hourly uptrend, at some point, you got to work back down towards that monthly 21. So until things change, I think you got a pretty good shot at seeing the S&Ps down towards that level. Daily chart in a downtrend, getting rejected at a 21 EMA, brand new daily squeeze, brand new daily sell signal, and now you're getting that bigger release of energy as the weekly squeeze breaks short. So that all translates to your short bounces under 5,700. And get through April 2nd, and it's a sell the rumor, buy the news kind of thing. All right, if the S&Ps can get back above that 5,700, might not be a bigger flush here. I think underneath it, you will get a bigger flush. So crappy scores, got the patterns, the squeezes, all the above. And then jump into the QQQ. That weekly squeeze officially fired short last week. You got rejected at your daily 21 EMA, brand new daily sell signal, and a brand new daily squeeze near the lows. With an open around 463 coming our way here. So that'll be a fresh low for the QQQ. So for conversation's sake, they take that weekly squeeze, they broke it, and now they work that thing down as that target. We're looking at QQQ down to 450, 440. A good, call it $25, $30 lower. From a monthly charts perspective, where does that take you? Just so happens it takes you back down towards your monthly 21 EMA. And I'm not showing you guys these monthly charts as hey, if we get down there, buy every call right away kind of thing. Just more so maybe some bigger picture context on the pullback. Your 1 hour time frames, your daily time frames, in some cases your weekly charts, they're getting tossed around pretty good right now. Could be the beginning of total bear market, or could just be pullbacks to monthly support. So that being said, 2, 3, 4, 5 weeks from now, QQQ has pulled back to the monthly 21, and we don't hold it, and we're underneath it, and we lose our buy signal, no more trend structure. That'll be a really big change. Really big change on a really big, meaningful time frame. That kind of action could definitely send us into a very different market. Or it could be, all right, push it, push it, push it. pull back, you chop around for a bit, you find support, you're getting your daily buy signals, 4-hour buy signals. And maybe by the end of the year, we're all looking back and thinking, man, what a buying opportunity was. But I think they got to get down there first. So from the QQQ, we can jump to what I think is one of the more problematic right now. And really, really sketchy pattern here for NVIDIA. All right, flush it, rally back to your 21. And for the most part, that's where NVIDIA's got a decent chance. Flush bottom, rally back to your 21. And if you can hold above it and rebuild, get some buy signals going, right, that might be all she wrote there as far as a big flush. Flush it, pop it, total rejection, right back down, brand new daily squeeze, brand new sell signal. So if we look at the inverse chart of NVIDIA, right, flip that bad boy upside down. If it had a good market behind it, I would want to buy as much of that as possible. It's my favorite setup in the world for a long. Rally back to a rising 21 EMA, hold their ground, find support, brand new squeeze, bunch of buy signals. Oh my! I buy a call and look for a big push higher. But that's the inverse chart. Real NVIDIA, same kind of thinking, same thought process. I think under that 120, it's in pretty rough shape here. Looking like an open around that 105, 106. So if they do take out the low here and break that squeeze short, don't forget on NVIDIA, you've also got that big weekly squeeze setting up here in the background. So it's a spot where on the QQQ, S&Ps, NVIDIA, etc., could be some squeeze on squeeze action, right? Daily squeeze break short, that takes out those recent lows. At daily squeeze break short, they're already in the neighborhood, so they go ahead and squeeze on squeeze violence. But yeah, so there's your pattern for NVIDIA. I would short any pop under 120. And then pretty similar action on the SMH. Right, as goes NVIDIA, goes the SMH. Flush, rally back to a 21, big rejection, brand new daily squeeze. If it were upside down, I'd want to buy a lot of it. Even better, I'd want to buy a lot of that because behind that daily squeeze, there is a weekly squeeze setting up. They fire the daily, that can get the initial push going. They ever go and fire the weekly, that can get a much bigger flush going or a much bigger move going. Right, so it's a sketchy combo to try to call for a bottom in. Weekly squeeze here, break short. That can take the SMH down to 200 to 190. So major game plan for now is, given the end of month action, end of quarter, everything coming up on April 2nd, maybe up until Wednesday, keeping more of a day trade focus. But the patterns are bearish, the signals are bearish, the scores are bearish, the squeezes are bearish. So till things change, looking for day trades on the downside. It could be as simple as I'm gonna watch my squeeze columns up here. And right now I got some 15-minute on the ESNQ, the RUT, YM, and the gold futures. So let me see, 15-minute on the NQ. I'm not gonna rush I'm not gonna force the issue. I'm not gonna rush a trade. Sit back, enjoy my coffee, and then, all right, can I get a white arrow anywhere here on the 15-minute? Had a couple orange arrows this morning, but no white arrow. So can I catch a moment in time like that? and if it can turn into a flush of that size, beautiful. But give me that on a 5-minute, a 15-minute, 30-minute, 1 hour time frame. Squeeze, white dot, white arrow. Can take it for a long, can take it for a short. For now, thinking I want to take them for a short. But all right, guys, that is the bulk of it for you. The patterns, the scores, the NVIDIAs, the SMHs, and all the above. and then a few spots of potential relative strength. You could look at gold and silver. Let's see, gold. Yeah, gold is just a beast right now. A beast, I tell you. The plan for gold might just be buy every, and I'm being a little bit tongue in cheek, but not really. Buy every 5 minute, 15 minute, 30 minute squeeze you get until the thing stops working. It is mighty strong. Overbought on the daily chart, but it won't matter until it matters. I mean, usually when it matters in like one candle. All right, pushing, and then one candle, you're back to back to 3,000. But yeah, you could look at gold. You could look at the silver futures, and then maybe an XLP, XLE. I think an easier trade is be patient, wait for a lower time frame, squeeze the setup, or short a rally into a 21 EMA. Y'all, any questions for me? Drop them in the chat here. I'll get caught up, and then folks in my room, we will kick off the open here shortly. Like I mentioned before we jumped in, though, if anything, drop a level at 55.65 on the SPX. 5565. Good morning, good morning, good morning. Good to see you, folks. Hope you had a good weekend. Went to my grandmother's 87th weekend, which is a blessing for sure. I did that in a little March Madness. But all right, I think we're good on Q&A, guys, so we will call it a morning prep there. And then I'm back with y'all, same time, same channel on Wednesday morning. And then, yeah, folks in my room, give me 10, 15 minutes. I'm going to go pour a fresh cup of coffee, and then I'll be with you for the open. So thanks again, guys. Best of luck today. And then, yeah, my general game plan, again, is just get through the quarter end, get through the quarter, get through the end of month, get through the end of quarter, get through all of the, what I imagine will be volatile action on April 2nd. Keep a day trade focus, and then figure out what I'm working with after all that. Alrighty, adios.